Beautiful. Let's see if this is. All right, Cycleplex 1. Let's go. Official test start time 2 minutes, 5 pages, 5 paragraphs each, 5 words each sentence, 5 sentences per paragraph, 5 computer spaces in between. You can use your hyperscientific, you can use any artificial intelligence or technology, any homebrew or anything that you like, but you must show the work and share it with the class. It has to be open source. If you do not show the work and share it with the class, I'm going to assume all you did was use technology, you will get 0 credit for it. So now you guys have finals, and I hope that you guys studied, because the first thing I'm going to do is I have to get a few designs in. But let us continue. Go Bloomberg, go channel, go videos, and scroll down to, we could start with the Bloomberg yield. Let's go over it. We went over it already, but so that nobody complains, they don't have the link, right? I have to engineer, so your exam starts in 2 minutes. You guys got what? 28 seconds. These commercials are straight Bloomberg, so we cannot override these commercials.
That protects our digital world. As Q-Day approaches, the real challenge is how do you protect data in motion? From New York City for viewers worldwide, I'm Scarlett Fu. The 1-hour edition of Bloomberg Real Yield starts right now.
Much better. Oh, forgot. This chair has a little bounce, so I gotta be careful when I'm designing.
Coming up, the Supreme Court strikes down President Trump's global tariffs, sending treasuries down and yields up. While stubborn inflation data, coupled with weaker GDP, signals the Fed can afford to take its time with lowering interest rates. And the fallout from Blue Owl's decision to restrict withdrawals from one of its private credit funds. We begin with the big issue, a weakening case for immediate Fed rate cuts.
Oh, last one.
We have to watch inflation.
We have this global reflation trade going on.
Most of the economic indicators, not just in the U.S. but globally, it actually been signaling that you're going to get a decent start to the year. The roaring 2020s is still very much intact. We've got the economy doing extremely well.
The economy's fine. The labor market is not stressed, nor is it overheating.
There has been some stabilization, but we are not out of the woods.
Under the surface, there are plenty of things that have got people worried.
There are some headwinds for inflation that can keep it elevated.
We have been waiting for this soft landing for 3 years, and it is arriving.
The interest rate structure doesn't need to go back down towards zero.
There is an intellectual basis for the cut as well. Fed policy just needs to be more data dependent. The data so far don't justify having lower Fed funds rates. We're of the view that they're actually kind of near the non-accommodative territory.
And that was the state of debate before 10 a.m. Eastern time today. So that brings us to our chart of the day. The U.S. 10-year yield getting a pop after the Supreme Court's decision to strike down President Trump's global tariffs. Now, given how oral arguments went last year, the High Court's actual decision was probably less of a surprise than the timing of its decision. Earlier this morning on Bloomberg, John Stolfus of Oppenheimer Asset Management gave his take on how markets are responding to this ruling.
Think of the uncertainty we have been living with since 2008, then the COVID, then the supply chain disruption, and look where the markets has come from. The markets tend to like uncertainty. It gives benefits for the short-term traders, leverage people initially, and then what gets thrown out sometimes like a hot potato, some perfectly good stocks, offers opportunity for intermediate to long-term investors.
And that was John Stolfus on Bloomberg earlier today. Let's bring in our international economics and policy correspondent, Michael McKee, who joins us now with more on the Supreme Court ruling. So, Mike, is this seen as good news or bad news for the economy, given that American companies won't have to pay these IEEPA tariffs, at least the way it's constructed now?
Can I be snarky and say yes to both sides? We don't know where we're going to end up here. So it's sort of like the ride where you are temporarily waitlist. We're in that state because these tariffs will go away, and that would, in theory, maybe pick up in consumer spending if things are
So
cheaper.
let me finish the test
It
before
might
we
help
start.
business investment. But the president's going to put on more tariffs. We know that. They've been talking about that forever. And we don't know what they're going to be. And we don't know how it is all going to work. So for the economy, it's kind of a nothing
gonna
at
put the
this.
three
And the
beans
Fed,
on this
everybody wants to
side
know
and
what the
for the
Fed's going to think, but
portion
they're
on
just going to sit back as they did when the tariffs were imposed and say, well, let's see what the impact is on the economy, and then we can react.
Right. I guess the bigger question too is what this means for the trade deals that have been signed with different countries, and the trade deals that are still being negotiated, because those were done with the tariffs in mind. They were kind of structured around those tariffs. Now that kind of all, we've shaken up the chessboard, and you're kind of back at square one.
That's an interesting question, because you're right. A lot of these trade deals were based on the fact that we're going to tariff you this much, sign a trade deal, and we'll drop that to this much. And now, since they can't do that with the reciprocal tariffs, then the question is, do countries want to enter into these agreements, especially or carry on ones that have been signed, especially if you don't know what your next tariff is going to be. If I've agreed to pay a 5% tariff, but then you put on a different tariff under a different regime and it's 10%, then to me the deal is void.
Yeah.
So that's something that they're going to have to work through.
And you join us every week, and you bring on a chart with you when you speak with us here on Real Yield, and you've got one on revenue from tariffs. What does it show?
Well, you were just showing the 10-year yield, and the 10-year yield in part has been rising because people are starting to get worried about the U.S. level of debt. This chart shows the revenue that the tariffs have brought in. There's three different kinds. There's the white, which shows the IEEPA tariffs that were ruled illegal. Trump has non-IEEPA tariffs, and then this says pre-Trump tariffs, but they were actually mostly things that he put on, like the steel tariffs, that have just been maintained. Those two, the gold and the blue, are going to stay.
Right.
Then some part of that white is going to be filled in. And you can see that most of the revenue is coming from the IEEPA tariffs because they're broad. They're all over the whole world, and you can't really get away from them. So we'll see how the president puts things in place. Most of the other provisions that he can use are for putting tariffs on sectors rather than countries. So it'll all depend on how this is constructed. But what it could mean is less revenue from tariffs, which could mean then the government sees a bigger budget deficit, and the president's idea of closing that goes away.
Well, we'll see how the White House responds. Caroline Leavitt, the White House press secretary, says that Trump will hold a press briefing on the Supreme Court's tariff decision at 12:45 p.m. Eastern time, and of course we will take you there when that begins. Mike McKee, thank you so much. All right, let's bring in now our macro roundtable to kind of fold in this latest news along with some of the issues that have persisted throughout the week. Sanal Desai is CIO at Franklin Templeton Fixed Income, and Mike Schumacher heads up macro strategy over at Wells Fargo. So I got to start with the SCOTUS decision, this long-awaited tariff ruling. Sanal, let me with you. How significant is this ruling for the economy, for the bond market?
So, okay, I'd started with saying that I agree with Mike. It's actually really far too early to tell because the administration has made it clear they want to make up some of these tariffs. Having said that, I was of a very small camp who didn't think the tariffs would have an important economic impact on the US. Hence, taking the tariffs away is unlikely to have an enormous impact on the US. It does have some impact on budget revenues, fiscal deficit, and of course 10-year yields. But in the end, the US economy was huge. And what we're talking about is huge. It's close to $30 trillion. And you're talking about $170 billion in terms of tariffs. Assume they all go away, it's a tax cut. And that's kind of good for the economy. And it's bad for the budget deficit.
Mike, I wonder if this is an input that's kind of out of the market's comfort zone. It's not an economic data point, but something kind of more nebulous where the timing is really in question. How should we judge today's market reaction where yields went up and you're seeing a bit of a steepening in the yield curve? I mean, it might just be a knee-jerk reaction.
Yeah, it's a good point. Markets really haven't done all that much, frankly, and I think it's because to a large degree this was anticipated. If you look at some of the online markets, Poly Market, for instance, yesterday had something like a 75% chance that SCOTUS would do this sort of thing, so the market said, aha. we're pretty much on board with that. When you think about the follow through, Mike McKee mapped it out pretty well. Yes, bigger deficit, more treasury supply, higher yields, it makes sense. But if you already had assigned a 3/4 probability to something like that happening, it's pretty tough to get super excited. Now, I will say the key point here is we don't know yet what the administration response is. Clearly, there's going to be one press conference. I'm sure it'll be fiery. It'll be interesting, but we have to wait for more info from Mr. Trump and Scott Bessent.
Absolutely. And of course, as I mentioned, the president to hold a press conference in response to the Supreme Court ruling at 12:45 p.m. Eastern time today. Let's talk about what this means for Fed policy, because the bond market's view, the consensus view, is for 2 cuts this year. Inflation or employment, the Fed's biggest challenge this year, Mike?
Peter Piper persistently missed packages, so he scheduled his deliveries with Amazon Business. Peter Piper, positively prospering. Amazon Business, your partner for smart business buying.
That's probably a bit of both, really. You need both to behave relatively well. And the Fed's in a fairly good spot, frankly. I think it's relatively comfortable with policy. If you look at the minutes that came out the other day, I'd say mildly hawkish was our interpretation. And yet there's a leadership transition. So the Fed's really not terribly motivated to do anything in the very near term. You look at pricing for the March meeting, it's negligible. Pretty unlikely they do much in April unless something falls apart. So I would say the Fed's on hold for at least a couple of meetings here. It wants to wait and watch and see. And in particular, the announcement coming out today doesn't motivate the Fed any additionally to come out and go. So I'd say you're probably looking at a couple of meetings before it acts.
All right, so on hold for a couple of meetings. So now Torsten Slok of Apollo has said that fiscal policy is expansionary, it'll lift GDP, and so as a result, it's kind of difficult to be bearish on the U.S. economic outlook. And later this year, he believes the conversation will change from talking about Fed cuts to talking about the Fed having to hike. What do you think of that?
So, I'm not going to go as far as talking about hikes, but I think I've been on the record for a couple of years now talking about where several years, talking about where I think neutral Fed funds should be, nominal Fed funds, which actually is closer to 4.25. So I see Fed funds currently in moderately expansionary territory. So I definitely don't see any need for additional cuts from here, given the current macro backdrop for the real economy. As we go further into the year, if we do see those tax refunds coming in as they are, as outlined in the Big Beautiful Bill, if we see that fiscal impulse coming out in the size and scale that has been envisaged, I think it's not unreasonable to assume certainly no more rate cuts this year. And if inflation responds to that strong impulse to consumption, you can't rule out anything, I'd say.
You can't rule out anything. And again, I go back to what Slok was kind of just projecting out. If the Fed is unwilling to hike in response to an overheating economy, that would increase the risk of higher long-term rates, a steeper yield curve, as well as a weaker dollar. How are you thinking through that possibility, Mike?
So a rate hike this year, very, very low probability. I think that's less than 5%. But if you think about next year, let's say toward the back half of 2027, sure, if inflation ratchets up a little bit, or even if it just gets stuck, could the Fed think about rate hikes? That's possible. Now, again, you've got the Warsh transition that's going to be an issue. And will he want to lean toward rate hikes anytime soon? That would be shocking, I think, to everybody, including him probably. But if the data do really turn around and come in quite strong or sustain a period of strength for, call it 6, 12 months, maybe possibly a rate hike toward the back half of next year. But this year, I would be shocked.
Let's talk about the Warsh transitions now. Jay Powell has talked about dissent among the policymakers being a good thing. It encourages robust debate. And a lot of people say it also protects Fed independence. There were 3 dissents at the December FOMC, 2 dissents at the January FOMC. Does this make it harder for Kevin Warsh, the incoming Fed chair, should he get confirmed, to control the agenda and deliver on what President Trump wants?
I think he can't. He's one individual. In the end, the Fed chair carries a lot of weight, but ultimately, what I would note is that Kevin Warsh is very well respected. He's been a member of the FOMC. in the past. Nobody was ever concerned about him being overly dovish. I think clearly he's more likely to be dovish rather than hawkish, but he's already indicated very clearly he doesn't believe in unorthodox policy with respect to the balance sheet, which is actually a big relief. And in terms of rates, he's motivating his notion for wanting rate cuts from productivity increases leading to price declines. I don't think that takes into account what's going on with fiscal policy, and also doesn't take into account that if you do have a higher productivity, other things being equal, that's a higher neutral rate. So I think it's premature to assume that Bush is going to be pushing hard for massive quantities of rate cuts. I think he's going to be looking at the data much the way the current Fed is doing.
What we've seen, of course, is volatility really tamped down across the capital markets. In treasuries, you look at the MOVE index, for instance, not doing a whole lot lately, Mike. You say that, though, the next big move in volatility is up, but not in the near term. Walk us through why.
Yeah, it could be a really long time. It's interesting. So I think the first step to start with, why has volatility come down so much? You think about the capital markets overall, FX volatility has been low for quite some time. The VIX has bounced around a bit, but generally somewhat low. Interest rate volatility was really the last one to join the party. It fell probably 4 to 5 months ago, and it fell a lot. Why did this happen? Because economic data have been pretty tame. And you think about the range of outcomes we're talking about here. We're talking about, will the Fed go once more? Is it done? Pretty narrow range of policy outcomes. That's because the range of economic outcomes is pretty narrow too. 9 months ago, 12 months ago would have been much broader. So I think the market's responding to a much more narrow set. But to your question, how long can vol stay low? It could be low another 12 months, 18 months, perhaps, something like that. That's what happened leading into the global financial crisis. I know it seems amazing, but vols were really low from, call it, early to mid-2006 through mid-2007, later 2007. Then, of course, they went skyrocketing. So you can have a long period of very low volatility.
All right. I really appreciate both of you joining us today. Mike Schumacher of Wells Fargo and Sonal Desai of Franklin Templeton. Thank you so much. Now, still ahead on Bloomberg Real Yield, a Wall Street bond trading hub goes all in on prediction markets. We'll give you the latest. This is Real Yield on Bloomberg.
Tax experts keep more money in your business, so you have more time for your business. Less tax stress, more open houses. Less tax hassle, more oat lattes. Less tax time, more grooming time. Get the most from your deductions so you can get back to your small business with TurboTax Expert Full Service Business.
Since I started using CoinLedger, reporting my crypto taxes has never been easier. Connect your wallet and exchanges and generate your tax reports. It took me less than 30 minutes. Get started with a free account and download your crypto tax report today.
I'm Scarlett Fu, and this is Bloomberg Real Yield. Prediction markets booming with popular trading platforms Kalshi and Volley Market handling billions of dollars in transactions weekly. Well, now the popular Wall Street bond trading hub TradeWeb is getting in on the action. Our Catherine Doherty is here now with us with the latest. Just first of all, let's back up a little bit and explain what TradeWeb's role is in the plumbing of the U.S. bond market and now what it's doing.
Right. So you can think about TradeWeb as the platform. This is where you have institutions that are mostly focused on the fixed income market coming, placing trades. They're also using this as a resource for data. They're looking at pricing, where they're going to be able to either buy or sell some of these securities in the open market. This is both helpful for predicting what the market is going to do in the future, and then currently these are real-time prices where they can transact on the platform. So why this matters of this deal with Kalshi specifically is now the prediction market pricing is going to be streaming into the TradeWeb platform. So those institutions aren't going to have to leave. They can stay on the platform that they're using to transact government bonds, other types of debt. And now they can take in new pricing for this new market that is emerging. And the hope, the goal is that eventually TradeWeb might even add trading capabilities. So again, everything that they've been doing in terms of transacting with fixed income securities, they can potentially in the future do with prediction markets.
Okay, so for now it's going to be input, but down the road it could be something more. Does TradeWeb service retail investors or institutional investors mainly?
So mostly institutional. They've been expanding to serve some of the retail brokerage firms. However, they're really known first and foremost as big institutional hub. Think asset managers, insurance companies, those that are handling very large orders. What they're saying is prediction markets are something that their customers are starting to ask for, and that it is right now, even the data points, the percentages that you might see in the prediction markets guessing whether or not there's going to be something that could be market related, or whether or not it's going to be a political decision. Those types of predictions are being inputted into trades that are happening elsewhere. So this is valuable data that TradeWeb CEO, in talking about this partnership, mentioned as another inflection point for his types of customers.
Yet another example of traditional finance companies and infrastructure companies dipping a toe into decentralized finance. Catherine, always a pleasure. Thank you so much. Catherine Doherty covers finance for us here at Bloomberg News. Now, coming up next on Real Yield, a moment of interest as Blue Owl drags private credit fears back to center stage. We've got more on the latest. This is Real Yield on Bloomberg.
It's Friday. I'm Norma Linda. Let's take a look at your midday movers. First up, we all seeing a few stocks in focus. We do see that tariff-linked stocks are on the rise. That's after we did get a SCOTUS decision that showed that Trump's tariffs are illegal. Among many stocks in focus, we do see some of those retail companies, of course, on the rise after the news. But we also did see furniture stocks in focus because they have been the subject of a lot of price increases here. But we are also keeping our eyes on shares of Apple. They're rising sharply after the ruling against tariffs reached a session high of almost $265 per share. According to Bloomberg Intelligence, Apple recognized around $3 billion in tariff charges over the past year. And speaking of tariffs, President Donald Trump is planning to hold a press conference later this hour at the White House. The White House says Trump will speak at 12:45 p.m. Eastern. We'll bring that to you live when it happens. Those are your midday movers. I'm Nora Melinda.
Now for a moment of interest. Private credit concerns top of mind for investors and companies this week after Blue Owl restricted withdrawals from one of its private credit funds. We checked in with Apollo President Jim Zelter, who tells us that he does not see anything of concern within his firm.
There are some great companies in our sector that have been victims of let's move on and let's pare down positions in periods of uncertainty. So there's nothing fundamentally that investors have told us that there's concern about our company or sectors, but there are certainly concerns about the growth of private credit in aggregate. And we've been pretty consistent for our stock long term to create the value that we believe it will. We're going to need to go through a credit cycle.
Yet there's plenty of concern when it comes to Blue Owl. The latest is that the firm is selling a $1.4 billion portfolio of loans to help return cash to investors. It found 4 buyers for the loans. Olivia Fishlow has been covering this story for Bloomberg News and joins us now. Olivia, let's just take a step back here. Why are investors in that one particular Blue Owl fund, private credit fund in particular, trying to withdraw their money, and have they been able to do so?
Open up your Baja apps.
Yeah, so this fund, it's one of the Blue Owl retail funds that, pulls together private credit loans. And is actually
Let's start with market overview. Silver, number 1, platinum, palladium, U.S. natural gas, chocolate, coffee, cotton, wheat, gold. ASEC 20, soybean meal. All right. Now let's go directly to commodities. You guys ready?
They did honor those redemptions,
Just
so
a
they
little
gave
bit.
everyone their money
Okay,
back.
much better.
But after that, the attempt to sort
All
of
right, let's rock and roll. Rapid fire. Gold stands in the green, 1.79%, 5,091.34 per ounce. Silver stands in the green, the green ranger, 7.26%, 84.13. Platinum stands in the green, 4.59%, 2,161.40. Palladium in the green, 3.96%, 1,733.63. Copper 3M in the green, royal flush, baby, 1.21%, 12,964 even and holding steady. Chocolate, the pallet, in the green, 2.95%, $3,072 even for the pallet. Coffee in the red, 0.10%, good for us, 287.65. And orange juice stands in the red, 3.96%, good for us, $180.55 a pallet. It was over 2 something a few weeks ago. Excellent news. All right, let's go to currencies. Top 20 coins. You ready? Let's go. Hedera, Athena, USDE, Hyperliquid, Chainlink, Stellar Lumens, Cardano, Binance Coin, USD Coin, Unis, SEDLEO, Coin, Solana, Tether, XRP, Ripple, Never, Tron, Zcash, Dogecoin, Bitcoin Cash, Monero, number 3, Ethereum, and Bitcoin. Bitcoin stands in the green, 0.05%, $68,025, 922 of a penny, holding steady. Ethereum in the green, 0.32%, 1,974 and 7,905 of a penny. Monero in the red, 1.43%. My Spanish people, $327 and 5,930, 6,927 of a penny. Bitcoin Cash stands in the green, 0.57%, $564 and 50,000 of a penny. Wow. Dogecoin stands in the red, 1.32%, 9 cents, 8,723 of a penny. Zcash in the green, 0.41%, $259 and 89,999 of a penny. Tron in the green, 1.26%, 28 cents, 8,900 of a penny. Let's go. All right, you guys ready? Here we go. As of the 19th, House Dems urged probe into Trump family crypto venture. A group of about 40 House Democrats, led by Representative Gregory Meeks, wrote a letter to Treasury Secretary Scott Bessent on Thursday, asking that World Liberty Financial, the Trump family's cryptocurrency business, be investigated for possible conflicts of interest and national security concerns. The Trump family's $500 million deal connected to the Emirati royal family is not only a matter of national financial instability, but it also carries serious national security implications, Meeks said in a statement accompanying the letter. Trust that the record will reflect whether Secretary Bessent chooses to answer to the American people or his mob boss. The venture previously applied for a national banking license from the Office of the Comptroller of the Currency in order to issue and hold USD1 stablecoins. All right, Coinbase CEO, Bitcoin slide is temporary as of the 18th. Coinbase CEO Brian Armstrong dismissed the recent Bitcoin price decline as a psychological shift rather than a fundamental flaw. During an interview with CNBC at the World Liberty Forum in Florida on Tuesday, Armstrong shrugged off crypto volatility as part of the industry's natural cycle, claiming that Bitcoin slide is temporary. Crypto sometimes is up, sometimes it's down, he noted, arguing that Bitcoin is still the best performing asset of the last decade, and that the company refuses to take a short-term point of view on price action. There is now a path forward where we can get a win-win outcome. Win for the crypto industry, a win for the banks, and a win for the American consumer. To get President Donald Trump's crypto agenda through to the finish line, Armstrong stated, noting that the legislation could land on Trump's desk within months.
And a $330
Coinbase Global
leverage
Incorporated
loan,
stands in the green 3.26%, 171.35. Bitcoin still stands in the green 0.10% the green ranger, $68,057 even in hold.
of as much as 5 percentage points above the benchmark.
Truth Social files for 2 crypto ETFs as of the
Now, sticking
13th.
with credit,
Trump's media, Truth Social Funds, announced on Friday that it had filed a registration statement with the United States Securities and Exchange Commission (SEC) for 2 exchange-traded funds.
That we are on oversupply from the hyperscalers and potential for supply ingestion. That in my view, is
ETFs.
a medium to longer term
The
concern.
Truth Social Bonus Yield Maximizer ETF will target CRO, the native cryptocurrency of the Kronos ecosystem, and staking rewards tied to this asset. The other one, Truth Social Bitcoin and Ether ETF, is designed to track investment results corresponding to the combined performance of Bitcoin and Ether. And
All right,
Ether
let's dig into
staking.
all of this with our credit roundtable
Crypto.com
because
will
there's a
serve
lot to
as the
unpack.
digital
Wendy
asset
Caesar is global
custodian,
head of credit
the
strategy at
liquidity
Credit
and the
Sites,
staking
and
services
Chief
provider
Chief
for the
Fixed Income
ETFs.
Strategist
The
and
company
Crypto
said
Commodity Research
the
at
launch
Morgan
of the
Stanley.
ETF is
We talk about
subject
investment
to
grade credit. There's a
SEC
ton of
approval.
cash coming in.
Trump
Clearly,
Media and
not enough
Technology
supply to
Group
meet it. And
in the
latest
red
data show that
4.35%,
investment grade attracted
$10.11.
$3.77 billion in inflows in
New
the
York
last week,
Stock
building on
Exchange
the
as
previous
of the
week's
13th.
$4.3 billion.
Coinbase up 15%
Year-to-date, our
as
James
CEO
Harvey
is
tallied it
more
up to
bullish
be
than
more
ever.
than $30 billion.
Shares of Coinbase
Daisha,
Global
let me start with you.
Incorporated
Spreads
jumped
keep
more than
returning to very tight
15%
levels.
on
Every
Friday
dip seems to be
after the
bought.
CEO,
What's driving
Brian
it?
Armstrong,
Who's behind it?
apparently eased investors' worries following a weak earnings report. We've been through cycles like this many times at Coinbase, and adoption continues to grow. Regulatory clarity is on the horizon, and I'm more bullish than ever, Armstrong said during the company's earnings call on Thursday. The cryptocurrency exchange reported a fourth quarter revenue of $1.8 billion, down 20% from the same period a year ago. The company also saw a net loss of $667 million, marking its second worst quarterly net loss ever. Coinbase stock soared 15.11% at 10:28 a.m. Eastern Time to go for 4,050 of a penny. Coinbase Q4 revenue drops 20% to $1.8 billion as of the 12th. Coinbase Global Incorporated announced on Thursday that its revenue in the fourth quarter of its fiscal 2025
So Winnie,
amounted
as
to
Daisha talks about some
$1.8
spread
billion,
widening, I'm wondering
dropping
what changes
20%
the
on
incredibly
an
strong
annual
technical
basis
in
to come
investment grade.
below
What could
analyst
trip it
expectations. The
Yeah,
company
so the thing
reported
that
a net
usually
loss of
trips the
$667
technical
million
is that people get
in the
worried about
3-month period,
fundamentals. They start
compared
to
to
see
$1.3
some
billion
degree of
net
actual
income
credit erosion.
in the
And we're
same
definitely
time
observing
frame
that in
in
some sectors,
2024.
like the chemical
Total revenue
sector, or there's
for
the
the full year
perceived fundamental
2025
erosion
rose
from the
to
tech sector with the
$7.2
amount
billion
of issuance that
from
needs to come down the
$6.6
pike.
billion
And then if
last
you
year.
factor in kind of broad-based
So that's
macroeconomic
600
considerations, is the consumer going to continue to spend at the same
600
pace?
million
Do
gross.
we get enough
Last year,
interest rate
marketing
relief to get kind of the
9.4%
industrial side
annual
of the economy
increase.
really up and running
We
again?
expect Q1
That's where you start to
subscription
see
and
a little bit
services
of a
revenue
headwind
to
on
be
the
within
side of the equation.
550 to 630 million. Our range reflects lower average USDC market capitalization and interest rates, as well as lower average crypto prices and staking protocol rates compared to Q4, the report stated. Coinbase shares traded 0.24%, down in the after-hours sessions following the release of the report to sell for $140.36 at 4:22 p.m. Eastern Time. MicroStrategy, as of the 9th, buys 1,142 Bitcoin for $90 million. MicroStrategy Incorporated, doing business as Strategy, acquired acquired 1,142 Bitcoin for $90 million in the week between February 2nd and February 8th, according to the company's Securities and Exchange Commission (SEC) filing released on Monday. According to the filing, the company bought Bitcoin at an average price of approximately $78,815 per Bitcoin, which includes fees and expenses. It used proceeds from a public offering of 616,715 shares of its MSTR stock. After the latest purchase, Strategy's total amount of Bitcoin reached 714,644. It was acquired at an aggregate price of approximately $54.35 billion, or roughly $76,056 per Bitcoin. The company's stock dropped by 4.78% during pre-market trades and went for 128.48 apiece at 8:52 a.m. Eastern Time, following the final release. Strategy Incorporated stands in the Green Ranger 1.24%, $131.05. As of the 6th, crypto-related stocks jumped. Robinhood soars 15%. Crypto-linked stock popped on Friday, with Robinhood Markets Incorporated shooting up around 15% amid Bitcoin's bounce back. Earlier this week, Bitcoin slid close to the 60,000 mark before making a quick recovery and trading above 70,000 today. With such changes, companies related to cryptocurrencies followed suit. At 12:10 p.m. Eastern Time, Robinhood Markets Incorporated jumped 15.38%. Coinbase Global Incorporated surged 12.06%. MicroStrategy Incorporated, doing business as Strategy, skyrocketed to 22.79%. And Super Microcomputer Incorporated added 8.9%. Super Microcomputer Incorporated stands in the green 0.81%, 32.42. Robinhood Markets Incorporated stands in the green 0.61%, 76.11. MicroStrategy Incorporated stands in the green 0.16%, 99.82. Coinbase Global Incorporated in the Green Ranger Royal Flush 3.26%, $171.35 a share. As of the 6th, Bitcoin jumps 11% to top 70,000. This is the 6th, today is the 21st, so 2-week cycle. Cryptocurrencies continued their rally on Friday, with Bitcoin jumping by over 11% to reach 70,000 again after yesterday's steep decline that led to a sell-off for major crypto companies, including MicroStrategy. The surge in Bitcoin's value comes amid a rise in shares of American semiconductor companies today, after a report claimed worldwide chip sales could surpass 1 trillion this year. Bitcoin surged by 11.68% to 70,135 and 261 of a penny at 11:55 a.m. Eastern Time, while Ethereum soared by 11.83% to $2,039, 2,335 of a penny. Bitcoin up 6% as of the 6th. Bitcoin rebounded sharply on Friday, reversing a recent sell-off that had dragged the token below 70,000 for the first time since 2024, as investors appeared to look past earlier doubts about crypto's role. The move suggests improving risk appetite after days of caution driven by geopolitical and macroeconomic tensions. The jump also comes as investors move away from precious metals, which resumed their decline. sliding around 10% toward the $65 level after a brief attempt to stabilize following historic losses. At 1:03 a.m. Eastern Time, Bitcoin, the world's most famous cryptocurrency, soared 6.11%, trading at 66,591 and 700 of a penny, while Ethereum 2 gained 7.66% at 1,962, 8,917 of a penny. Amazing. So you can do the comparison right there. 1,962, we're at 1,976, so not a bad day, for a few days. Bitcoin dips 11% to below 65,000. This is as of the 5th. Bitcoin continued its downward trend by falling more than 11% on Thursday, dropping from the 65,000 threshold for the first time since October of 2024. The largest cryptocurrency in the world has dropped by over 25% since the start of the year. Concerns about the United States economy, such as inflation and slow job growth, the United States President Donald Trump's pick to lead the Federal Reserve, and geopolitical tensions have all contributed to the decline in demand. At 3:07 p.m. Eastern Time, the world's most famous cryptocurrency was trading at 64,991, down 11.02%, while Ether was priced at 1,935, reflecting a 9.76 drop.
We're just about halfway through the trading day in New York.
Von der Leyen to visit Greenland in March, as of the 19th.
Shares of Walmart are declining. That's after HSBC cut the recommendation on the company to
That's
hold
out of
for buy.
sequence.
The analysts say that while
Let me get out of here.
results were solid, with volumes growing and
If that has nothing to do, let's go tech news.
the outlook for 2026 is quote-unquote surprisingly weak, given solid trends. Also, Blue Owl Capital shares are falling for the second day in a row. That's after a decision to restrict
As of the
withdrawals from one
20th,
of
you
its
guys
funds
ready?
raised
We're
fresh
going to finish it
concerns
here.
for the private credit
Microsoft
market
Gaming
and sent
taps
shares of asset
Asha
managers
Sharma
lower
as
yesterday.
new
And
CEO.
finally,
Finally,
technology shares were
Microsoft
down
Gaming
after the software
announced on
company gave an
Friday
outlook for adjusted
that
earnings.
Asha Sharma,
That's weaker than
who
expected
most
for both the
recently
fourth
served
quarter, the first
as
quarter,
head of
and
product
the full year.
development for
And the
Microsoft's
U.S.
core
Supreme Court
AI
struck down President
subsidiary,
Donald Trump's
would
sweeping
take
global
over as
tariffs.
CEO
President Trump is
and
planning to
executive
hold
vice
his Congress
president
opinion
of the
at the
company,
White House.
as Phil
We'll bring that to
Spencer
you live
retires
when it happens.
after almost
Those
40
are your
years
midday movers.
with the
I'm Norma
Xbox
Linda.
only. As part of the overhaul that involves Spencer or Spencer's departure and Sharma's promotion, Microsoft Gaming will also see Xbox president Sarah Bond exit the company and Matt Booty promoted to Chief Content Officer. Microsoft Gaming consists of nearly 40 development studios, including Activision, Bethesda, Blizzard, King, Mojang, and Xbox Game Studios, in charge of popular games like Call of Duty, Candy Crush, Diablo, The Elder Scrolls, Fallout, Halo, Minecraft, and World of Warcraft, in addition to the Xbox game console. Microsoft Corporation stands in the red range of 0.31%, $397.23 a share.
They might have wanted to make a decision sooner rather than later, and we know that.
All right, CoreWeave dips 12% on data center financing woes. Here we go. Shares of CoreWeave Incorporated fell over 12% on Friday, following a Business Insider report stating that Blue Owl Capital was unable to obtain funding for a $4 billion data center project in Pennsylvania that CoreWeave Incorporated will occupy. The Lancaster facility, which is 80 miles west of Philadelphia, attracted little interest from lenders, according to the report. One lender rejected the deal because of doubts about CoreWeave's credit worthiness. Recently, Blue Owl Capital made headlines when it revealed restrictions for investors' redemptions at one of its funds. At 12:35 p.m. Eastern Time, CoreWeave stock tumbled 12.22%, going for 85.27 apiece. Concurrently, Blue Owl Capital lost 3.21% going for 10.99 per share. Blue Owl Capital Corporation stands in the green. The green range is 0.35%, 11.47. CoreWeave Incorporated Class A common stock stands in the red, 8.12%. The red ranger, 89.25.
Was seen before it ultimately ended up getting appealed all the way up to the Supreme Court. So that's
OpenAI, as of the 20th, said to be developing smart speaker and glasses. OpenAI has dedicated a team of over 200 employees to develop a family of AI-powered hardware, including a smart speaker, smart glasses, and a smart lamp, the information reported on Friday. The first release is said to be a smart speaker priced between $200 and $300, featuring a camera and facial recognition capabilities to identify users and their surroundings. The people with knowledge of the plans told the outlet. While the company may tease the hardware later this year, the smart speaker is not expected to ship to customers until February 2027 at the earliest. The project is a collaboration with Johnny Ive's design firm, Love Fun. Though mass production for more advanced devices like smart glasses is slated for 2028. 2020, let's go. Paramount. No statutory impediment to Warner Brothers Discovery acquisition. Paramount Skydance Corporation stated on Wednesday that following the expiry of the 10-day statutory waiting period on February 19th, there is no statutory impediment in the United States for the company's proposed acquisition of Warner Brothers Discovery Incorporated, ticker symbol WBD. The waiting period was extended from its original deadline of December 23, 2025, after the United States Department of Justice requested additional information relevant to Paramount's offer in order to conduct its review. Under the Hart-Scott-Rodino Antitrust Improvements Act of 1976, in its filing to the United States Securities and Exchange Commission, SEC, Paramount said it will continue to engage constructively with antitrust enforcers and other regulators around the world to secure regulatory clearances and approvals necessary. The proposed deal also came under fire from a group of United States Democratic senators who threatened to urge for an investigation into Paramount's bid, after the company's CEO, David Ellison, refused to appear at an antitrust hearing. Warner Brothers Discovery Incorporated stands in the green range is 0.77% to 8.75. Paramount Skydance Corporation stands in the red range of 2.10%, 10.79.
This panel here at MBA Craft, I consider these three people both friends as well as competitors. And so one day they are my best friend.
There's a few extra ones that you guys can use for extra credit. I'm going to tell you what they are.
Enemy, but they're certainly fierce competitors with my firm. So it's a real pleasure. I see my friend Justin at the end there.
Okay, this will be extra credit for whoever needs it, whoever didn't do the homework, whoever said they didn't have the link, whatever. Japan's economy expands by 0.1% in Q4. That's as of the 15th. You can use that. Swiss economy expands by 0.2% in Q4. That's as of the 16th as well. That's two modules right there. Let's do 3. Global X outage affects thousands of users as of the 16th. OpenAI, Microsoft joined UK AI Alignment Coalition. You guys can use that, or I'll give you a wild card. You could do NVIDIA, set to be nearing $30 billion investment in OpenAI, and I'll give it to you guys for free. Ready? Let's do that. We're going to close out with this. And this is on your finals. I don't want any excuses. None of my students should be failing. Let's go. NVIDIA is closing in on a $30 billion investment into OpenAI that seeks to replace the long-term $100 billion partnership agreed upon by the companies last September. The Financial Times reported, citing sources. The investment could be finalized as early as this weekend, the report said, adding that the $30 billion is part of a larger funding round that is on its way to raising over $100 billion and valuing the AI startup at $730 billion, not including the new money. In turn,
you and I then went to Las Vegas at NBC, and their owners of course,
OpenAI will reinvest much of its funds into NVIDIA hardware. Smart move. I want you guys to write about that. Though the two companies won't be going forward with the $100 billion multi-year commitment announced last year, according to the report. NVIDIA Corporation stands in the green, 1.02%, 189.82. And that's it. So we'll be right back. Have an amazing day today. May you conquer everything in your path. May everything you touch into solid gold bars and silver bars and beautiful and precious gemstones such as moissanite or laboratory-grown diamonds or any laboratory-grown gem. Always remember to dream big because dreams come true. It happened to me. I know for a fact it's going to happen to you. So you guys ready? Let's get a quick prayer. You ready? Let's go. Thank you, Heavenly Father, for all the blessings in our lives. We thank you, Heavenly Father, for all the blessings in our lives. We worry not about what we don't have because we're in the process of getting it. And in that journey, everything we do is in your name. Amen. Amen. All right, check me out. Check me out. Check me out. Oh, check me out. Yo, y'all ain't ready. All right, we got a performance. And we have a live stream. We gotta go, but we'll be right back. But I love y'all so much. See y'all in a little bit. See you in a Bitcoin.
Has persisted for a couple of years now.